it's one of those days you open up your Hungry Bull app and you're like, I don't want to look at it. I don't want to look at it. I got to look at it. Oh my gosh. I mean, it's no bueno out there today. If you haven't seen a big downward day for the Dow today, mainly a big downward day for the Nasdaq here today, down 2+%. And I think that's what the markets are really feeling. And in this video, we're going to discuss what's going on in the market, why we're down huge today, and kind of what's going on here, because I'm seeing a lot of different rumors and things like that. There are kind of two main reasons why the market's down today, and we'll talk about if it even makes sense, okay? I think that's an important part. Does this even make sense that the market's down this much here today, okay? Hope you guys enjoy this. As always, make sure to subscribe to the channel if you're not already. Much love. Thanks for joining me, okay? So, yeah, Nasdaq, I've been in the market 14 years, and I don't know if I ever remember the Nasdaq starting off a year this bad, right? We're entering week 3 of the stock market this year, and the Nasdaq's already approaching down a 7% number year to date. 3 weeks into the year. I mean, this is extraordinary. Like I said, I don't think I've ever remember the Nasdaq having this rough of a start to a year. Nasdaq for the 1 year still up 12%, but shoot, at this pace, I mean, give it another week or two and we'll be down for the past 1 year. It's extraordinary, right? And I think that we just have to mention that right off the top here, like how extraordinary, because this is not natural. This is not a normal market. You know, you don't usually start out a year with the Nasdaq down almost 7% year to date. That's just extraordinary how vicious this year has started for the Nasdaq. In terms of my watch list, oh, the pain is everywhere. I mean, it's just awful. Smile Direct Club down 8% plus today. Uber-de Booba stock. This is a stock I'd probably be buying right now if it wasn't for the fact that there's so many other stocks that are super cheap right now. Uber down 6.7% here today. Purple's another stock I'd be buying right now if it wasn't for the fact that I have so many other stocks I'm busy buying right now. PRPL, that one's back under $10 a share, down over 6% here today. Voyager Digital down 6% today. Oh my gosh. I mean, it's just devastation after devastation. And many of these stocks I'm showing you here, they've already been at 52-week lows, and they just break through the 52-week low after 52-week low. And that's just, we're in a unrelentless market right now. Last year at this time, we were in an unrelentless bull market that came to an end basically toward the end of January, which is a market that it's just like, stocks kept going up to new 52-week high after new 52-week high, and it was like crazy, right? And here we are in this market where these stocks just continue to break through 52-week low after 52-week low. And many of these stocks are now at not just 52-week lows, but actually all-time lows, which is interesting, like, going past just, the past 52 weeks, right? Lemonade stock down 5% plus here today. Look at Palantir, down another 4.5% as of right now. I believe it hit a new 52-week low here today during the trading day. Palantir just continues to be devastated, and that's a company that is expected to be profitable this year and has a great growth story over the coming years. And those, even these type of stocks, I think it's very important, because some people think it's only stocks that aren't profitable or aren't expected to make any money this year that are the stocks that are getting hammered right now. No, it's even a lot of companies that are expected to be profitable this year, but maybe they just have higher PE names. And to be honest, in this market, even lower PE names have been hit recently. Oh, look at Corsair Gaming is a perfect example. That one's not a high PE, and that's an extremely profitable business. And look where that stock is, 52-week low. Oatly here today, OTLY. I might have bought this one here today, right around a new all-time low for Oatly with the crazy, it doesn't matter what you have going for yourself over the next 5-10 years in this market right now. Oatly has such a beautiful future for the next 5-10 years, and it doesn't matter. It doesn't matter. Like, it doesn't matter in this sort of market right now. It doesn't matter what Palantir's long-term, prospects are for this company over the coming years. It doesn't matter how profitable the business model is going to build into, how sticky their product's going to be. None of that matters in this sort of market. All the market cares about is sell. That's literally it right now. Nothing else matters in this sort of market. We're in a completely an irrational market right now. Maxar Technologies down 4% plus today. Teladoc hit another 52-week low here today, 3.8%. That one just continues to get hit day after day after day. It's just like, where's the bottom? And then it'll have one bounce back day, and it's like, maybe it finally bottom, then just new 52-week low. And that's the same for a lot of these stocks. GoodRx here today, Another stock that if I wasn't busy buying so many other stocks, I'd probably be buying right now. GoodRx down to a new 52-week low, down 3.6% here today. Beyond Meat down 3.5% here today, and they got a huge launch with KFC that's going right now, and that's gone huge on the internet. And it did nothing. Like I said, nothing matters right now. There's also a lot of rumors about new Beyond Meat plant-based jerky product that could be hitting stores over the next few months. A lot of rumors about that if you're really up and up on this stuff. But does it matter in this market? No, it doesn't. Nothing matters, okay? Robinhood, new all-time low for the hood here today, down another 3.5%. That one just, it can't get worse for the hood. Well, I guess it can get worse for the hood, but this is about as, what the hood's going through right now. It's just, it's just bad on top of bad. Facebook down 3.5% here today. Like, that's not a high PE name. That's the thing. Look at Facebook's PE. Not a high PE name. Has incredible growth over the coming years. Has a ridiculous balance sheet. But even that one sells off on a day like today. So that's just a market we're in right now. That's why I think it's it's a misjudgment if folks think it's only like some crazy speculative companies that are falling. No, Facebook's not some crazy speculative company, and yet that one's down 3.5% here today. Honest, a diaper company and a wipe company down another 3% to an all-time low. It's out of control. I might have bought a lot of Honest here today, like maybe 1,111 shares or something like that. Maybe something like that. Okay, you look at RVLV. This one got hit today, down about 3%. Corsair Gaming 2.5% for Corsair Gaming. Once again, one of those stocks. Think about this for a moment. That is one of those stocks that. This is not a high PE name. Corsair Gaming is not a high PE name. This is not some crazy speculative company. It's a great company that's a profit machine and is led by a CEO who's been leading this company for a long, long time and has been doing a phenomenal job. And they got innovative products that they always have coming out. But it doesn't matter. It doesn't matter in this sort of market. It's just down, 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 right? SAM hits a new, that's probably right around a 52-week low now for SAM at 439 here today, and I believe it was even lower than that at one point today. Amazon down over 2%. Like, what are you going to say bad about Amazon? We're going to talk about Amazon a little later in this video. Heck, even Pfizer is down today. Oh my gosh, it's bad when Pfizer's down. PayPal, new 52-week low for PayPal here today. Yeah, this one, another one. PayPal's at a 35 roughly forward P. It's not like that's some crazy valuation on the stock, especially when you consider PayPal's growth and where companies like this are valued at. But does anything matter right now? No, it doesn't. Does it matter that PayPal has a number 2 and number 3 most popular financial apps in the entire United States of America? No, it doesn't matter right now, right? Does it matter that Venmo has a huge deal coming with Amazon? No, that doesn't matter. Nothing matters right now in this sort of market. We're just gone completely irrational mode, right? Look at Amazon for a moment. Look at Amazon stock. This stock is down almost $300 a share now from where it was at in July of 2020. That is nothing short of extraordinary. Amazon has some chill out time periods, there's no doubt about it, but this has been one that's been, a bigger chill out time period than many in the past. To be down about $300, almost $300 a share over the past year and a half is pretty extraordinary for Amazon in the end. So Amazon's, like I said, when it comes to some of these companies, does it get better than Amazon? The e-commerce just continues to expand, is going to continue to get bigger and bigger over the next 5-10 years. You got Amazon Web Services, that's just a profit machine, a cash flow machine, and Amazon's just a growth beast. But does it matter in this sort of market? It really doesn't. This is that sort of market that nothing matters, right? By the way, the chef somehow is having a good day. Like, if it wasn't for the chef today, I don't even want to know how much my accounts would have been down. But I have so much money in the chef that because that one was actually up today, wow, we actually hold decent, okay? Now, you want to look at something very important that some people would say is very important. The Russell 2000 falls toward a 1-year low, in danger of first death cross since March of 2020. When you got to compare anything to March of 2020, it's been rough. Like, literally, March. If anybody was in the market in March of 2020, shout out if you're in the market in March of 2020. If you have to compare any time period to March of 2020, it's rough. So yeah, it's in danger of its first death cross since March of 2020. That's how rough it's been for the Russell. Like I said, anytime you've got to go back to that was the fastest stock market crash in the history of the stock market. 22 trading days. The S&P 500 fell 35%. That was extraordinary. And anytime you've got to go back to that time period for a comparison, you know it's rough, okay? There's just no dang doubt about that. Look at the Russell now. This is very interesting, right? The Russell now at this point in time, for the 3 month, is down 6.8%. Ugh. You know, and by the way, the Russell is another flawed index. The reason the Russell is another flawed index, like the Nasdaq and like the S&P 500, is it's weighted toward the biggest stocks. And some of the biggest stocks in the Russell have held up pretty decent. And some of those stocks are way above a $5 billion market cap. When you think about the Russell, you usually think about market caps under $5 billion and a lot of like, you know, 3 billion, 2 billion, 1 billion type market caps, right? But the Russell, like all the other indexes, is flawed. It's held together by the biggest. And I can tell you these numbers, if it was a true representation of what's going on in the Russell over the past year and over the past 6 months specifically, believe me, it would look a lot worse than what it actually shows on a surface level, right? But the 3 month down 6.8%. Year to date already for the Russell, not as bad as the Nasdaq, but pretty dang bad. Down almost 6% year to date so far. Remember, we're 3 weeks into the trading year. That's extraordinary. The 1 year, we're down on the Russell now. We're down over the past 1 year. In regards to the Russell, it's just, I mean, it's you know, I don't want to say it's as bad as it gets, but it's pretty dang bad. You know, when you're down on a 1 year and when you got these type of lows, and when your index is flawed and it's showing better than the truth is, when you go a little beneath the surface and you start to really view where the truth of the Russell and the truth of small caps, you start to find out that it's so much worse than actually what the Russell index is showing here. That's the extraordinary part. And if you just looked at this, you would say it's bad, right? So that's pretty crazy. The VIX is up massively today. Huge spike up in the VIX. This is a 5-day looking at the VIX, which basically just shows you the volatility that's going on in the market. 16% plus move here for the VIX here today. Yeah, the market's gotten shaky. Let's put it that way, okay? Now, there's a few core reasons why the market's down huge today that we got to discuss, all right? So first reason is Goldman Sachs came out with earnings this morning. Goldman, the headlines read, Goldman pays up for talent, sending profits down. Wall Street's giants' compensation expenses soaring 33% in 2021. Now, a couple ways of thinking about this. A couple ways I think about this is, yeah, inflation is even hitting Wall Street in terms of wage inflation. So compensation expenses up huge, profitability, it hurts profitability, right? And that's obviously not a good thing for Goldman Sachs, and we're seeing that across the board. JP Morgan said basically a pretty in-line thing about their compensation. Now, something to keep in mind is I think compensation was also pretty dang high because there was a lot of money to be made last year for the investment banks. The market had a pretty dang good year, at least where it finished at, right? As far as S&P 500, so there was a good amount of money to be made there. Early in the year, there was crazy trading activity going on, as we know. So there was a lot of money to be made there, which sends bonuses up and all those sorts of things, which sends compensation up. So I don't think this is a sustainable thing that's going on. I don't think this is going to continue in terms of this rate of increase for compensation for the big Wall Street banks. However, right now, Wall Street looks at this as like this is a very, very negative thing, and they're worried about, are all these other public companies going to see expenses up 33% as far as compensation? I don't think so. However, there's no doubt there's wage inflation going on, like there's every other inflation going on right now, and that's obviously hurting Goldman Sachs. And look at a Goldman Sachs here today, There's a stock down 7% here today. So a vicious move for Goldman Sachs. As far as this stock, hit 347 at the lows here today. 270 is a 52-week low, so it's still quite a ways away from the 52-week low. But my gosh, I mean, if you get if you get 2 or 3 weeks of the financials weakening, you could be at a 52-week low. That's the craziest thing about a stock like Goldman Sachs, right? And the financials in general. And remember, the financials are big weights. Many of these stocks are $100 billion, if not several $100 billion. Goldman Sachs, $100-something billion. You look at JP Morgan, that's many, many hundreds of billions of dollars in market cap. Look at Wells Fargo, look at Bank of America, and look at other big banks out there. And these do weigh on the market. So if we get a situation where JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, and these others continue to pull down, it's going to pull the entire market down because the weight is so heavy. And that's some, food for thought there about kind of, this market and the place we're in right now. Now, next thing up here we got to talk about is 10-year treasuries. So 10-year treasuries went up 0.076%. Now, if you read everything on mainstream media, this is what is blamed for essentially, the market being rough. The 10-year Treasury has gone to a 2-year high. And I know you're thinking, that sounds stupid. Send all these stocks down to new 52-week lows and this stock down to 4%, 5%, 6%, 8% because the Treasury moved up 0.076%. Yes, you're right. That is stupid. It's flat out stupid. But that's the market we're in right now. I mean, if the Treasury goes down 0.076%, do all these stocks deserve to be up 5, 6, 7, 8% tomorrow? No, not in my opinion. But that's how irrational the market's gotten right now, where a little move like that in the Treasury just sends all these stocks massively lower, right? Massively lower. And it's just that's when you know you're in a completely irrational market. Now, there's always a fear, like, could we ever go back to a 10-year, like somewhere in here, maybe something we had in the early 2000s? It's always a possibility, but it's very hard nowadays. Let's just put it that way. There's a reason things have been downtrending since the 80s, and that's because we live in a very debt-ridden society as a government, states, companies, people in general, and so it gets very hard to ever see the 10-year climb do any major upward numbers. It's not impossible, but it's rather unlikely. Let's just put it that way. Because of the entire way our financial system's set up now, how much debt the government has, if interest rates were to jump 1%, look at what that does, or 2% or 3% for that matter. Look what that does to the interest the U.S. just has to pay on their debt. It's the numbers are mind blowing, literally mind blowing, and so that's why it's 10-year always pretty much has to stay low. Now, in terms of how low, that's the debate, right? Are we at like a 2.5 to 3% number? Or are we at a 1% number? Or are we at a 1.8% number and those sorts of things? That's always for debate. But one thing I do know is it's stupid that all these stocks hit new 52-week low after new 52-week low because the 10-year goes up a little bit. That just, that's not making anybody move their money for the most part, right? Like, who's like, oh gosh, got to buy the 10-year Treasury because it just went up 0.076 today. I got to go buy the 10-year Treasury, sell out of everything, even though all these stocks are at 52-week lows. Sell my PayPal, sell my Lemonade, sell my da-da-da-da-da. Come on, man. Give me a break. You got to be flipping my flapjacks if you think I'm going to buy that for a minute, right? At the end of the day, what this comes down to is there's certain times in the market when certain stocks get overvalued and the market is just looking for any reason to sell them off. That can be recession fears, that can be China, that can be a presidential election, that could be tariffs, that can be a treasury yield. It can be always something different. It's always something different, but at the end of the day, the market will find a way to get stocks back in line with where they should be. And it's something I've been covering on the channel the last few months. This is from Yardini Research, so thanks Yardini for always putting these slides together. Is something we've been covering is large caps have been trading too rich. We need to come down to an inline number, right? We need large caps profitability to increase over this year, and we need the valuations to get more in line with where they should be. They don't have to get down to lows or something like that, but we got to get in line. We're just been too high for the large caps. Mids have been trading cheap. We know that. Smalls have been trading incredibly cheap, like incredibly cheap. We know that. So smalls and mids are where the opportunity has been for the last several months and could continue to be where the opportunity is, especially if these stocks continue to just mindlessly go down to new 52-week low after new 52-week low. But at the end of the day, we've needed large caps to get in a range that makes sense, right? And that is somewhere in here, right? In 18, 19 is fair. A 21, we're too high. And so that means large caps have to continue to come down. That means that large financials, many of them probably are going to come down a little more. And big tech probably has to come down a little bit more. That's something we do know. And we know where the true opportunities are in this market. And the treasury yields and those sorts of things, that's just another excuse to get the market in line with where it needs to get. And the market is going to look for any sort of opportunity to get the market in line, okay? So now the next debate is, how long does this last? Like, how long is stocks crashing? Like, how long does this last? So I might do a video late tonight, keep an eye out for it, on Financial Education 3, on kind of diving into like how long something like this lasts, because I know that's like a lot of people are asking themselves, like, when does this end? There's a lot of talk like it ends in 3 months from now. There's a lot of talk that ends in 6 months from now. There's a lot of talk it ends in the next couple of weeks. And there's so much debate about that. So we're going to look at history. We're going to look at, how long markets like this continue to last for, so we can get a kind of an idea of how long something like this lasts for. So make sure you're subscribed over there. Hope you guys enjoyed this video. As always, let me know if you bought any stocks out there. I'd love to hear from you guys always. Make sure you subscribe to this channel as well. If you're going to join us in my private stock group, learn directly from me, join the private Discord channel, sorts of things, check out pinned comment down there. Much love and have a great day.